I'm going to do what is the agenda today is presenting what is a venture capital, presenting more in details what we do at Capagro, how we are organized, what we are looking for also, so the type of companies we want to invest in, the KPIs that we are looking at when we want to do an investment, and also our latest impact approach that we have as a venture capitalist. So maybe before starting to go deeper into the subject, I wanted to present you what venture capital is and how it is structured, because it's quite key in that presentation. Indeed, VC, as we call them, is fund that gathered numbers of limited partners that invested in what we call the venture capital. But this is only it can be one fund, two funds, three funds gathering and managed by the same team. But the limited partners that invested in that fund can be different. So for example, at Capagro, we've been created in 2014. And for the first fund that we have under management, we have 124 million under management, gathering 13 limited partners. Very soon, we will be raising our second fund with the same team that is managing the money and the vehicles that we have under management. And this one could be financed by more limited partners or by the same historical limited partners. So it's very important to keep in mind that every fund can have different limited partners and can have different strategy of investments. But more generally, a fund should last between 10 to 12 years. So you first have a phase of investment, and then you have a phase of disinvestment. So the VC has to exit the companies that it invested in. Basically, you have several ways to do so. You can sell the company and do an M&A. You can just raise money to private equity, etc., etc. So let's go back to Capagro. What is our investment thesis for that first fund? So as I mentioned before, we are a fund of 124 million under management, and we want to invest in the most ambitious startups of two sectors that are the AgTech and the FoodTech sectors. That's why I'm talking today. That's very important to specify that we want to target innovative startups, and we want to target startups that have a tech aspect in their technology, in their solution, in their value proposition, because it's where we can add value also as experts. We also want to target fast-growing companies, since as a venture capital, we don't have a long time before exiting the companies. That's what I explained just before. We enter a company, and then depending on the timing and the milestones, we exit, I don't know, 5, 7, maybe 10 years after entering a company, but we don't have an open horizon, let's say. Then we focus on startups that are raising money and that are raising between 1 to 5 million euros for a first ticket, but we can follow up until 12 million for subsequent rounds. So if the companies that we have in our portfolio want to raise again, we can go until 12 million, and that's in order to respect a kind of diversification of our portfolio. Finally, we are focusing on Europe. So our portfolio today is mainly European. We haven't made any investment in Italy, but I've recently been in charge of trying to invest in Italy. So feel free to just send me opportunities or talk to me about your startups. I'll be happy to have a look. We can also invest in North America. We have one of our partner that is from Canada. and that is really pushing for the investments in North America. And finally, Israel and Brazil are two geographies that are very dynamic in terms of innovation in our sectors. So we are opportunistic in those geographies. So to do so, the GP team is made of 10 people. We have the 3 partners that you see on the top. Tom Espiard is the one from the Canada. Bénédicte Monpère has an agriculture and food background, and Anne-Valérie has been investing in the VC ecosystem since 20 years. So between those 3 partners, we cover really the finance aspect, the agriculture aspect, and food aspect, and also the VC ecosystem that is quite key in that industry. So basically, as you can see, we are a majority of women, which is quite unusual in that industry. And the big specificity, I would say, is that we have half of our team that has an engineering agricultural background, and the other half is more finance oriented. So that's make a kind of balance in terms of investments. For now, our portfolio is made of 12 companies. So you have all the companies listed here. We cover the e-models subsector with Agriconomy and Label V. Label V is doing e-groceries and is very famous now in Paris, and the COVID helped, of course, a lot for its activity. In terms of traceability and food safety, we have Bomil, which is a Sweden company, and ePrononce, which just partnered with IBM Food Trust for following the traceability of the wine bottles. In terms of indoor farming, we have 2 companies. Clean Greens is selling aeroponic salads, and Prêt à Pousser is selling, it's very cute, and it's a great gift for Christmas if you don't have any ideas, but it's selling indoor gardening. Then we have specialty ingredients that's quite specific, so I won't develop, but you have Cello in that. Very interesting sector is the robotics and file sensors that you see below. So Nayo and Ecorobotics are 2 companies. One is French and the other is Swiss. And the 2 of them are trying to solve the pesticide problem. So what they do is that through robots, they identify weed, and they remove the weed, or by doing a precision spraying, or by just mechanically removing the weed. So it's helped a lot in reducing the intrants and the pesticide that you use when you're farming. Then in terms of new food consumptions, a very beautiful brand is UG, and is selling baby food that is very healthy. And our latest investment is Jaffe, which is positioned on the personalized pet food. So it's basically selling food for your pets that is personalized to the race of the dog, the activity of the dog, the age of the dog, everything. So it takes into consideration a lot of elements that you answered before subscribing. If you have any question on that, I could go back on all the companies. I have more details on the appendices. So basically, I just described here all the key elements of success that we see when we are looking at an opportunity. So this might be very interesting for you. I can also develop more in the Q&A or later if you need to. But basically, so we are looking at 9, let's say, big elements, and in which you have. First, we are looking at the team. So we need the team to be compatible in terms of C-level, in terms of the whole team. We need to it needs to be complex and complete, let's say. The C-level has to have enough experience or to be backed by people that have enough experience. We can have this role as we invest in a company. For example, the Jaffe company that I mentioned before, the two founders are very young, but we are helping them a lot with our experts that we have and that we know from our ecosystem. We need to have a C-level already in place, so we are not financing companies that still have to recruit, I don't know, a co-founder, or to recruit a CMO if the company is very marketing oriented. We have to have a C-level already in place, or to have reason for it not to be. Finally, we want to know if there is any board in place, if on a large scale, if it's structured, and what we have to do after investing in the companies in terms of team structuration and experts that is helping the company. The second thing that we are looking at, of course, is the products and the service. So it has to be meaningful for us in terms of impact, for example, in terms of business model, in terms of techno. As I mentioned, we just invest in companies that have a specific techno and patents that it can protect. We are looking at the typology of the clients that are buying the product or the service, and also at the legislation, because it can be a very, very big subject if the company is not aware of a new legislation coming or whatever. In terms of markets, so we are looking at markets that are products and solutions that are in line with the market tendencies. That's quite logical. But for example, I don't know, we won't invest in a company that is selling food that is not natural at all or whatever, since we know that the naturality of the product, it's quite key for the consumers right now. So we try to really understand the deep tendencies that the consumer wants, that the market is saying, and try to be aligned. We also target addressable market with a minimum size, which is around 1 billion, because that's the same idea as before. We want to invest in fast-growing companies. So if the addressable market is too small, we won't have an enough value added before we need to exit the company. In terms of geography addressed, it has to be aligned with the one that I mentioned before, and also the way the company wants to develop has to be aligned with the strategy of the company and the tendencies that we mentioned before. Then you have the positioning of the company. So each company in a sector, in a subsector, has different competitors that are direct, that are indirect. And we want to identify all of them to really understand the numbers that they are, if the market is very competitive, if they have a real competitive advantage, and what are the entry barrier and IPs that can protect the company. So that is very key, because sometimes you have sectors that are full of competitors, of actors, very old, but you have that one that is protected in a way, and that is aligned, for example, with market tendencies. So we are able to deep dive even if it's very competitive. Then you have the performance and strategy. So that is more oriented into the current sales, the historical sales. So we want to see that growth or whatever. If it's not growing, for example, because of COVID, we need to really understand the dynamics. Then we need to understand the marketing, the commercial, and the industrial strategy. And we really deep dive into those three categories. We won't just look at the deal very superficially. We are looking at very specific data. In terms of ambitions, we are looking at the projections that the company share with us. So we usually ask for a profit and loss forecast and a cash flow forecast. And we need to understand the hypothesis that the company took in order to construct this business plan. And we need to challenge them. So usually the entrepreneurs, and I don't blame them for that, of course, but they are very optimistic on their growth and they don't take some elements into consideration. They think that the growth of the first months will continue at a certain stage, whereas, I don't know, the market in Italy is already mature, so it cannot absorb any more customers. So we really do a work with the founders to challenge them on their hypothesis and to create our own business plan that takes into consideration maybe more conservative, but sometimes it's also more ambitious hypothesis. Then we are looking at the transaction. So it has to be a transaction that is appropriate for a venture capital. Sometimes entrepreneurs come to see us and present deals that are very interesting, companies that are just brilliant, but that are not that doesn't fit the venture capital industry. So we need to understand the purpose of the financing. We don't do, for example, buy the shares of others just to let them go out. We invest money that needs to benefit the business model. We are not just trading money here. Then we are looking at the capitalization table. So it has to be aligned with the interest of the funders. The funders needs to keep a significant amount of the company to be also aligned with our own interests. So we are very careful here with the capitalization table, which is key. Also for the upcoming recruitment sometimes. Then we are looking at the main terms of the transaction. We need to be protected, but also the entrepreneurs need to be protected. So it's always a negotiation period. And we need to have in mind the exit opportunities, as I mentioned before. So who might be interested by the company in 5 years, 10 years, and what could happen in the future. Finally, we are looking at the risk factor. So we are looking at the industry and market, the company and management risk, the financial risk, and we do at the end a SWOT analysis to really understand the sector and the threats that you can find in the next future. So this is basically all the elements that we gathered to really understand if you want to invest or not in a company. And if you have all these elements, we, of course, will be interested in meeting you. So that's very difficult to just give KPIs that we are looking at. We are looking at a lot of KPIs, and it's dependent on the business model that you are addressing. So basically, I recently looked at a D2C model that is selling products online. In a D2C model, what you are looking for is a LTV that is quite relevant, important, a churn rate that is very low. You are looking at gross margin that is high. If the gross margin is too low, it might be problematic. You are looking at the return on ad spends because you are acquiring new clients online, usually today. We can also look at the rotation of the products when it's on shelves products. We can look at the payback. So the shorter the payback, the best it is for the company. Well, we have many KPIs that we can look at, and it's very depending on the business model and the sector. So if we want, we can go back on that after. To go back on Capagro more generally, so the big specificity of Capagro compared to other financial venture capital is our limited partners. So usually in the limited partners, you have a few financial actors, such as BPI in France, which is a very big investors, but also banks or institutional investors. In Capagro, we have 13 limited partners, which is quite huge in terms of numbers. And those limited partners are industrial from the sector of AgTech and FoodTech that give us a lot of value added for other companies. So this is the list of all the limited partners that we have and that we are working with. You have, for example, Les Mousquetaires, which is a position on the distribution side. You have LSDH, which is food producing. You have Bell on the cheese production. Tereos on the sugar production. In Vivo, which is a co-ops. Terena also is a co-ops. So this is quite key in our positioning because it's not the usual structure of a venture capital. And we are working with them every week to understand what is their strategy, what is their problematic today, and how we can help them through the startups. So we really try to create a lot of synergies between the startups that we invested in, but not only. We also try to create synergies with the startups that we meet and we are not investing in, because it might be very interesting also for them, not as investors, but as industrials. So here are the names of the experts that we are working with from those limited partners. So in terms of innovation, we have the director of R&D at Tereos. We have the marketing and innovation director of In Vivo. We have the innovation and R&D director at Bell Group. Same at Isagri. We also have a lot of financial experts such as Claire Mingon at Sophie Proteol, or other names. I'm not going to list them all. And also in terms of strategy, we have a few actors at Groupement Les Mousquetaires and Groupama. So these are all the experts that validate our investments and that help us to really understand the positioning of the tech companies. That's important to mention that we are not a corporate fund. So what is a corporate fund is an investment arm of a specific industrial. So for example, you have Danone Manifesto Venture, which is financial arm of Danone. And they are not independent in the decision. If Danone doesn't want to invest in that specific startups, they won't invest. We are independent in our decisions, so we don't have to ask them for their permission, for their agreement. We can invest in the companies that we think are the good companies to invest in at that moment. Usually we are aligned, that's for sure, because we are talking a lot with them and we want to create value. But it can be that we are not, and in that case we can invest even if they are not okay with that. So here is a list of examples of synergies that we developed with them. We have one joint venture between Clean Greens, which is the aeroponic startup, and LSDH. So this synergy helps to accelerate the commercial phase, permits to grow a new greenhouse to collect data and help building a data offer. Also, it's a source of additional funding. We are creating a lot of business partnerships. So a great example is Nayo and Groupama. For example, so Groupama is an insurance company, and it has developed a very specific offer for Nayo, which is the robotic startups, in order to insure in a customized way the robots of the company. And finally, we have a lot of R&D projects. Now we have even more than 11. And we are testing very often the products that we invest in our LPs facilities such as Intermarché. So that was for the limited partner side. Now I wanted to present you the impact work that we did with the whole team. So we recently formalized an ESG approach with the whole team. We have drafted and signed an ESG charter. That's the first step, and the entire Capagro team just signed it. In that charter, we decided to create a pre-investment analysis grid that excludes all the companies that are not addressing at least one SDG. So this is a new engagement that we take as an investor. That's not our limited partner that asked for it, but we really wanted to be more involved in that subject. So as we are investing in companies in the AgTech and FoodTech sectors, you have only a few companies nowadays that are not having an impact on when they are created. But we really wanted to make sure, and sometimes you can be surprised by companies that are not taking that into consideration once building their business model. After that, so that's for the deal flow part. After that, when we have invested in the company and that it takes part of our portfolio, we are monitoring 3 to 5 objectives that we are defining with the founders of the company, and that are really core business. So we want to follow and see the evolution of those 3 to 5 objectives towards the time, the growth of the company, but that needs to be key. So, for example, if we take the aeroponic company that is Clean Greens, we can follow the numbers of water that is not wasted through their model, and that we can follow it very precisely, and it's core business because they are doing aeroponics to avoid wasting water. So that's an example. And finally, as for our limited partners, we will issue our first annual impact report for 2020, beginning of 2021. So that's also a big step in order to take engagements and to communicate on a strategy that we have always followed, but that we haven't communicated yet on. Here you have a numbers of examples of the impact of our companies. So as I mentioned before, you have in the health NIO, which is the robots that is doing weeding and reducing the pesticide use. So it has a direct impact on the health of the people. UG is an organic, no sugar added, and salt-free baby food. So it has an impact on the babies that you feed with. You have a lot of examples. In the environmental side, you have the Clean Greens, as I mentioned before, with the 90% water saving in plant production thanks to aeroponics. And in the society, for example, as a venture capital, we created 2,030 new jobs since 2014. So that's an example of an impact on the society that we have. Finally, in terms of impact, we recently signed the PRI, which is promoting responsible investments. So we're very happy on that. It's asked us for additional work, but we are happy to do so. We also signed for Sista France Invest commitment, which is promoting equity in venture capital. So as I mentioned before, we are very oriented on that subject, since we have more women than men in our investment team. And finally, we are focusing on the 3 SDGs that I I added below, and I'm sorry it's in French, but basically it's the SDG 2, 3, and 12 that are oriented on food and ag. So to sum up, we are following secular trends. We are leveraging numbers of limited partners from the sector of AgTech and FoodTech that really help us to understand the strategy and the problems, issues that we have currently as an industrial. Then we are focusing on growth investments, and we have a really active involvement once in our portfolio. We go from upstream to downstream, as I mentioned, so we cover the whole value chain of AgTech and FoodTech from robotics until the end of distribution. And we want to have an impact on that all. So thank you very much. If you have any question, I can go back on any points. Feel free to just ask and I'll be happy to answer.